Now, as you well know, it's Youth Month, and while unemployment remains a real crisis, there's also some innovation on the rise. One of the fastest growing fintech trends is earned wage access, and young South Africans are leading the charge. Instead of turning to debt, they're unlocking wages they've already earned. Denise Neethling is with me now from the financial wellness provider Paymenow to explain what the shift tells us about youth money and financial empowerment. Denise, a very warm welcome. And what, in your opinion, then, is leading to this turnaround, this new trend?
Hi, Jeremy. Thank you so much for the opportunity. Yes, I must say it is inspiring to see how the youth are determined to take control of their financial futures. Our youth are clearly eager to adopt this innovative financial solution, like you say, like earned wage access, to navigate the economic pressures while avoiding traditional debt traps and just going on to quick fixes to cover mid-month expenses or unexpected expenses. It's great to see that they're adopting it. It's very inspiring for the country moving forward into the future to see that our youth are building a great foundation for their financial futures moving forward. Like you say, on Paymenow, we've seen a massive increase in the demographic 18 to 33. It grew by 132% in people adopting earned wage access. And it's great to see that they are shifting their mindsets as to how they manage their money from an early age to ensure they have a strong foundation moving into their futures when it comes to their finances.
Give us your best definition of earned wage access.
Earned wage access is basically getting access to money before the end of the month, money that you've already earned to cover unexpected or emergency costs that you didn't budget or bargain for. We all have these unexpected costs, and while you work during the course of the month earning money every day, you have to wait until the end of the month before that money is paid to you. Now, if something comes up and there's an unexpected cost and you don't have alternative funds or access to credit, you have to turn to loans or loan sharks to cover these costs. Now, having these unexpected costs already puts stress on someone and has an effect on your productivity. Knowing that I can use the money that I've actually already worked for, I've put in the hours, I've worked for it and I've earned it. Knowing that I can use a portion of that really gives me that dignity back, knowing that it's my own money, I am back in control, and I'm now not reliant on a loan or on debt to cover these costs. So that basically, in a nutshell, was earned wage access is, or access to your earned wages.
So, Denise, how would you respond to critics who say this model still promotes short-termism over real saving habits? Essentially, it's just another payday advance, isn't it?
Well, in a sense, it is an advance on your salary, yes. However, with earned wage access, there's first of all no interest that is charged to the money that you advance. Second of all, you get the control back in your hands, and it's your own money. So you're not borrowing from anybody. You are in control, and you are basically saving already because there's no interest that you're paying. So in a sense, earned wage access is already promoting saving, because instead of having to pay the money back at the end of the month with interest, and we know that loan sharks and motionists, they charge a ridiculous amount, you are only paying back what you, or basically advancing salary that you've already earned. So yes, there might be critics, but remember, the fact that earned wage access exists doesn't mean that people will no longer have mid-month expenses. We all have it. We're not going to stop the fact that you have it, but getting access to your own money as opposed to having to get a loan is the best alternative to keep you in control and empowered with your finances.
The challenge, of course, for employees and employers is to avoid this becoming a revolving door of early wage access and cash flow stress every month. It can't surely be something that happens in perpetuity.
No, definitely. And, we do see when we implement with a company, you do sometimes see at the start of the implementation or the start when it goes live, there is possibly a surge because it's something new, people are adapting. But because our platform is coupled also with financial education, it's very important that it's not just earned wage access, but also financial literacy training. Then we shift their minds because they start thinking differently about the money. So earned wage access on its own is maybe not sustainable, but when you couple that with financial literacy, it teaches people to budget, how to manage their money better, and how to look at their money moving into the future very, very differently. So yes, then we see it basically, the usage not come down, but it kind of goes on a middle ground. We see that people are only accessing it for emergencies. They're accessing it for transport money to get to work. So yes, there is a surge at first, but because we train them financially as well, they start to think differently about their money and how they spend and manage it.
Denise, one figure leaps out at me, and that's 132% growth in users between 18 and 33. And I'm wondering if that reflects smart financial planning, as you've suggested to me, or also a degree of desperation, particularly among younger workers.
It might be. Remember, there's a lot of challenges that face our youth at the moment. We have high unemployment rates, work is scarce, cost of living is quite high. So it might be, it can go either way. But the fact that we see the surge in earned wage access as opposed to getting loans must be a positive for us to see that, yes, there might be a desperation. There's a lot of financial stresses that face these guys, but at least they are turning to sustainable habits or a healthy alternative in covering these costs, in managing their money. So yes, it is concerning, but it's good to see that they're choosing the better alternative to build a strong foundation with their finances.
And just a final one, is there a danger that employers could use earned wage access as a substitute for paying living wages or offering real financial benefit?
There might be, but at the end of the day, earned wage access is still a way in which you are looking after your staff. You're allowing them to be more focused at work. You're allowing them to be more productive at work because they don't have to go and ask their managers for loans, or they don't have to know someone at the company knows that I've got financial stress. So yes, that might be a way in which they substitute it, but if you look at the benefits that earned wage access brings and the positive effect that it has in the workplace, we receive so much positive feedback from our employers saying the work culture has improved, the productivity has improved. So in that sense, yes, there might be risks also in an employer doing it, but replacing it with earned wage access has a lot of positives that I think outweigh the negatives.
Denise Neethling, thank you very much indeed from the financial wellness provider Paymenow. I do appreciate your time. And that's where we're going to leave it. You've been listening to Money.